Hey there, and welcome. All right, if you're gearing up for the SCMP exam, you know performance reports are a huge topic. So today, we're going to crack them wide open. We'll get into the core theory, see how it applies in the real world, and then we'll tackle a couple of exam-style questions so you know exactly what to look for. Let's dive in. So let's kick things off with a simple question. Imagine you're the CEO of some massive global company. How do you actually know what's happening on the ground? Is that factory in Vietnam hitting its targets? Is the sales team in Brazil on track? I mean, you can't be in a dozen places at once, right? So how do you manage it all? Well, the answer is a special kind of tool in the manager's toolkit, the performance report. And I want you to think of these as way more than just a bunch of boring spreadsheets. They're like the nervous system of the entire company, sending these critical signals from every single department all the way up to the top. They're designed to turn chaos into clarity. Okay, but this brings up a really big challenge. Let's say a report lands on your desk and it shows costs are way too high in the marketing department. So who's on the hook for that? Who's accountable? This is where our first key concept for the exam really comes into play. Now, before I hit you with the official exam term, let's use a simple analogy that'll make perfect sense. Just think of a school report card. Simple enough. But instead of grades for math and science, this is a report card for every single manager. And it tracks how well they're doing, but only on the stuff they can actually control. Things like their department's specific costs or revenues or the assets they manage. And that brings us to the official SCMPE keyword you need to know, responsibility accounting. This is the formal system that creates those manager-specific report cards. It's all about collecting and reporting information in a way that directly links performance to the manager who's in charge. Getting this definition down, maybe even word for word, is how you lock in those full marks on the exam. Now, what's so smart about this whole system is the way the information flows. See, it's not just one massive, overwhelming report, it's a pyramid. The department manager, down at the base, gets a super detailed report just for their team. Then that report gets summarized and rolls up to their boss, the division head. And those summaries get condensed again into the big picture report for the CEO. It's a brilliant system, right? It makes sure everyone gets exactly the level of detail they need and nothing more. Okay, so we figured out how to track who's accountable. But the next big question is, what should we even be measuring? In the old days, the answer was easy. Profit, profit, profit. But today's business world is way more complex, and it demands a much, much broader view of what performance actually means. And that leads us straight into another huge concept, the triple bottom line. The idea here is that modern reports should measure performance across three key areas: people, planet, and profit. Let's put this through a quick case study lens. Imagine a coffee company. Profit is easy, right? That's just sales. But people could be how well they're sticking to fair trade practices. And planet might be measured by their switch to biodegradable cups. It gives you a complete 360-degree view of success. And hey, the triple bottom line is just the beginning. You'll also see things like the Global Reporting Initiative, or GRI, ESG reporting, which, by the way, investors are totally obsessed with right now, and the Integrated Reporting Framework. The big takeaway here is that performance management today is so much more than just looking at the financials. Okay, I really want you to lean in for this next point, because it's one of those no point left behind things that's super easy to miss in the exam. A report for just 1 month, yeah, it's useful, but the real magic happens when you compare them over time. By setting a regular reporting period, say every month or every quarter, managers can spot trends. Are customer satisfaction scores slowly dipping? Are material costs creeping up bit by bit? That trend analysis is what turns raw data into a real strategy. All right, that's enough theory for now. Let's put this knowledge to the test, right? Time for a little exam-style workout. I've got 2 multiple-choice questions for you, pulled right from past SCMP materials. Okay, here's our first question. Take a second, read it carefully. Which of these statements about internal performance reporting is actually true? Think about what we've just discussed. What's the whole point of these reports? I'll give you a moment. Did you get it? The correct answer is B. And here's the logic. Internal reports are for the company's eyes only. They are not required by law, they're totally voluntary. And that means management has complete freedom. They can design them in any shape or form that helps them make better decisions. They don't have to follow any strict accounting standards or external rules. Okay, ready for round 2? This one's a little trickier, so pay close attention. It's all about non-financial performance measures. Your job is to figure out which combination of these statements is correct. Take a good look at each one. All right, the answer here is B. And the trick to this question was finding the one statement that's flat out wrong. which is statement number one. It claims that non-financial measures don't involve numbers, but that's just not true. Think about it. How do you actually report on something like customer satisfaction? You can't just write good. You have to turn that fuzzy idea into a hard number, right? And guess what? There's an exam keyword for that.
That keyword is construct. It's a fantastic term. A construct is simply an attribute or a quality that you can't just measure with a ruler or weigh on a scale, things like employee enthusiasm or customer empathy. So to track it in a report, you have to find a way to quantify it. You turn the construct of customer satisfaction into, say, a 1 to 5-star rating from a survey. So you see, it absolutely involves numbers.
Okay, before we finish up, let's do a super fast keyword recap. These are the terms you need to have absolutely drilled into your brain for the exam. Ready? Responsibility accounting, triple bottom line, ESG reporting, non-financial measures, and, of course, a construct. And there you have it. That's our deep dive into performance reports, from building accountability to measuring success way beyond the bottom line. The real question I want to leave you with is this. As our world gets more complex with AI and climate change and all sorts of new challenges, what will the performance report of the future really measure? Something to think about. Thanks for joining me.